Hey everyone, and welcome back to another video for today. Yes, I know it's been a hectic day. This video, let's talk about Google. First of all, how about Google? First quarter of $100 billion in revenue. Remember when Google was at $130, $140, right? Oh, Google was dying. The only thing that is dying right now is the bear thesis. That's the only thing that's dying right now. So we're going to go over the earnings report and some things that were mentioned during the earnings call. I'll start with that. Mercadolibre and Meta, really quick overview on those, and then we'll be back with the live stream and you can ask whatever questions you want in the morning. So without further ado, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first up we have Meta. Meta is down 7.4% at the time of making this video. Revenue increased 26% year over year. EPS, if you excluded that one-time huge tax charge, it would have been $7.25. Easy beat, okay? Easy beat. All the rest here, very good. Real's annual run rate is now over $50 billion. Incredible. Operating income, $20.5 billion, 40% operating margin. Again, very good quarter. Don't let this minus 7.4% change your mind. Then, when we look at guidance, and here maybe you might see some of the issues, I would say. So for Q4, Meta anticipates total revenue to be in the range of $56 to $59 billion, assuming an approximate 1% foreign exchange tailwind. Then, for the expenses, this is usually where things go wrong. Well, wrong for the market, that is. So full year 2025 total expenses are updated to a range of $116 to $118 billion. That's representing 22 to 24% year over year growth. CapEx for the full year, $70 to $72 billion. So an increase there. Q4 tax rate is expected to be between 12 to 15%. Now, looking at 2026, Meta is expecting CapEx dollar growth to be notably larger than in 2025, driven by significantly expanding compute needs for AI. Total expenses are also projected to grow at a significantly faster percent rate in 2026 than 2025, primarily due to infrastructure costs, including cloud expenses and depreciation, and increased employee compensation, particularly for AI and add technical talent. So that's probably, in my opinion, the reason why it's down 7.4%. Looking at a quick overview from Stock Market Nerd on X, as you can see, for the quarter, beat revenue, beat daily user estimate, beat EBIT, sharply missed EPS estimate due to a $16 billion non-cash tax charge. As for the guide, Q4 beat estimate, barely, but still beat, raised annual OPEX, raised annual CAPEX, raised 2026 CAPEX as well. All in all, my opinion, still Meta, tremendous company. Then, Mercadolibre, by the way, they did again hint at a potential future cloud business in case they overbuild. It's again, small hints here. Switching to Mercadolibre, beat revenue estimates, beat GMV estimate, and also beat TPV estimates. They did miss EBIT estimate by 4.7% and EPS by $1.37. There are accounting changes and investment adding to margin pressure. And so for the quarter, revenue increased 39% year over year, marking the 27th consecutive quarter of growth exceeding 30%. Insane. Mercadolibre, by the way, is down 2.7%, basically back to prices not seen since a couple of days ago. Operating income increased 30% year over year. Unit shipping cost in Brazil decreased 8% quarter over quarter in local currency. Argentina's revenue grew 39% year over year in USD and 97% in local currency, with items sold up 34%. Mercado Pago's credit book in Argentina expanded by 100% year on year. Fulfillment capacity increased by 41% year on year as well. As for the quarter, they said the following thing. The quarter highlighted the significant impact of Mercadolibre's strategic investment, particularly the lowering of the free shipping threshold in Brazil, which propelled items sold to accelerate from 26% to 42% quarter over quarter. This initiative not only boosted buyer engagement and retention, but also enabled an 8% sequential reduction in unit shipping costs in Brazil by leveraging increased volume and slow delivery capacity. Mercado Pago demonstrated robust growth, achieving record net promoter scores in Brazil and accelerating monthly active users driven by successful credit card and yielding account products, with older credit card cohorts now consistently profitable. What do we also see here for guidance? Again, it's not a company that usually gives us any guidance, but they did reiterate their commitment to disciplined long-term investment to capture significant growth opportunities in commerce and fintech. The company anticipates maintaining marketing spend within a similar range, approximately 11% of revenues, focusing on profitable user acquisition. Again, this is a company that in the short run, yes, they do not mind seeing margins go down a little bit as long as it adds to its future growth. And well, future growth, I mean, when you can say that this is the 27th consecutive quarter of growth exceeding 30%, I guess you can take a small margin hit. Mercadolibre, to me, is one of those companies you just buy and hold and forget about it. As for Google, we are going to make our way to $300 per share. We're going to make our way to $4 trillion. It's just a question of when, not if. We've been making our way to $3 trillion. We're now at 3.24. We are going to reach $4 trillion probably before the end of 2026, which when you think about it is quite crazy that we talk about these numbers as if it's the new $400 billion. Insane. Anyways, these were my Google catalysts, right? Not just for now, but for the last couple of quarters. Cloud growth, Gemini usage, search query growth, and then the narrative will shift. It's exactly what has happened. Of course, the DOJ case, right? The not selling of Google Chrome and Android, of course, also helped the stock. Let's first start here with a couple of comments. Alphabet had a terrific quarter with double-digit growth across every major part of our business. We delivered our first ever $100 billion quarter. Our full stack approach to AI is delivering strong momentum, and we are shipping at speed, including the global rollout of AI overviews and AI modes in search in record time. In addition to topping leaderboards, our first-party models like Gemini now processes 7 billion tokens per minute via direct API use by our customers. The Gemini app has now over 650 million monthly active users. We continue to drive strong growth in new businesses. Google Cloud accelerated, ending the quarter with $155 billion in a backlog, and we have over 300 million paid subscriptions led by Google One and YouTube Premium. We are investing to meet customer demand and capitalize on the growing opportunities across the company. I mean, just insane, and these are basically all of the results for the quarter. We'll dive a little bit deeper, of course. Revenue increased 16% year over year. Total costs and expenses did increase faster than that, with a big jump here in R&D and also G&A that did increase 105% year over year. Income from operation was up 9%, net income was up 33%, and diluted earnings per share up 35%. Now, one thing that's obviously also increases and expected to increase in 2026 is CapEx. So CapEx for the quarter increased 83% year over year. It's insane. These numbers are insane. Then, as you can see, this is basically total revenue for the quarter. Usually we see Q4 peak, then Q1 drop a little bit, the usual quarter, and then from there on out, you go up. But to me, the fact that we have seen an acceleration in growth already, it means that Q4 is going to be one hell of a quarter for them. Now, going back to something that I love to share, which is this one, right? Search as a percent of the overall revenue of the company continues to come down a little bit every single quarter. Why is that? Because the rest of the business is just growing faster. Cloud is just becoming a huge part. Subscription, bigger part. YouTube, a bigger part. And so slowly but surely, you're going to probably see a 50-50 split here. Now, of course, search will remain a huge business for a company, very, very profitable. But Google Cloud, this is basically it. Google Cloud has seen an acceleration in growth, 33% or so growth year over year for the quarter, with margins expanding. Last quarter, that was around 20.7% or so. We are now already in the 22%. So we have an acceleration in growth for Google Cloud, and we have margins that are expanding as well. Here you can see Google Cloud operating income up 84.6% year over year. I mean, this inflection point here and then this huge rise, truly remarkable. Looking at Google Search, as you can see, still a giant business that continues to grow double digits. Okay, low double digits, but still, it's insane. $56.5 billion in one quarter, and you are growing. Yes, I'll give the simple example. This business is growing faster than PayPal. Yes, of course. But then again, the example, the comparison doesn't make much sense, but I'm pleasing the haters, so you're welcome. YouTube ads. YouTube is up 15% year over year. This is now a over $40 billion business on an annual run rate. If you look at Google subscription, platform and devices revenue, also an acceleration, small acceleration in growth, grew 20.8% year over year to $12.87 billion for the quarter. So all in all, if you look at the last 12 months, I mean, these are insane businesses. Google Cloud could be a standalone business, probably worth $1 trillion or so. Maybe $1 trillion. Okay, it's maybe a higher multiple than what you would give AWS, because AWS is definitely $1 trillion business if it were a standalone business. YouTube ads, what's the multiple you're giving that? Right, this is also a huge business. Last 12 months, $40 billion in revenue or so. 10 times sales, 5 times sales. Well, what are you putting on that? So when you look at all of this, Google subscription platform and devices, same thing here. It's actually bigger than YouTube, right? It's a $46 billion business for them in the last 12 months. Incredible. I'm very happy that we talked a lot about Google. Just a lot, right? Not too much. When the stock was much lower. I mean, it's quite crazy that you could have bought this thing for $140 or so. What was it, back in April? And now we're seeing it double, and it's still not overvalued in my opinion. Then if we have a look at a couple of comments here, Alphabet's strategic investments in AI are yielding substantial returns, positioning AI as the primary driver of growth across its diverse portfolio. The company's full stack AI approach, from infrastructure like its custom TPUs and NVIDIA GB300 powered Max instances to leading models such as Gemini 2.5 Pro and Veo Genie 3, is a key differentiator. The leadership is evident in Google Cloud, which saw its backlog surge to $155 billion and signed more $1 billion plus deal in the first 9 months of 2025 than in the prior 2 years combined, with over 70% of existing customers utilizing AI products. Also, Gemini 3 apparently is going to come out later this year. So yeah, I don't think that the fun is over. Looking at guidance, Alphabet anticipates a potential foreign exchange tailwind to revenues, though volatility persists. Advertising revenue comparisons, particularly for YouTube, will face headwinds due to strong US election spending in the prior fourth quarter. Google Cloud is expected to maintain high demand for its enterprise AI infrastructure and solutions, including TPUs, GPUs, and Gemini 2.5, as evidenced by its accelerating revenue growth and a $49 billion sequential increase in backlog in Q3. This is just mind-blowing stuff. The company projects a tight demand and supply environment for technical infrastructure through Q4 2025 and into 2026. CapEx for 2025 has been revised upwards to a range of $91 to $93 billion from the previous $85 billion estimate, with a significant increase anticipated for 2026. I mean, are we at the end of the AI cycle? Is the AI bubble about to burst? Doesn't seem like it, right? Doesn't seem like it. This aggressive investment in technical infrastructure will continue to exert pressure on the P&L through higher depreciation expenses and data center operational costs, with the depreciation growth expected to accelerate slightly in Q4. Sales and marketing expenses are also projected to be more heavily weighted towards the end of the year to support product launches and the holiday season. One last thing here, at a little conference here, a Google VP and a GM of AI and infrastructure said that TPUs are sold out. 7 and 6 year old TPUs have 100% utilization rates right now. Okay? 7 and 6 year old TPUs. This is not something that the market was expecting. Market and some skeptics, fine, that's normal, you can raise questions. We're saying, okay, after 3 years, 4 years, maybe it's done, it's over. We're talking about 7 and 6 years old TPUs with 100% utilization rates right now. Incredible stuff. And so right now, to finish it off, I mean, Google is such an easy company to hold. The fact that we could have bought this, that we did buy this in the low 140s in April, and even before, right? This is, of course, a stock that, yeah, did face some criticism, company that did face some criticism, sometimes for good reason as well. But the comeback this year has been just insane. I mean, the things that Google has been releasing this year, companies, I mean, the stock is up 54, 55% or so year to date. But company-wise, tech-wise, they've been really, really outperforming a lot of their peers. And that's probably why it is currently going for $300 per share. So incredible quarter, great performance. What else can I say? What else can I say? Have a good one. See you in the next one. Bye-bye.